Hey everyone, hope you're having a good day. My name's Andy, my channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media, like I normally do each morning. I'm going to interject my financial opinions as we go through it. It's generally going to be related to three different topics: wealth building, commodities, and or financial topics. So let's dive in there. Let's take a look and see what people are sharing. If you want to follow me, it's at Finding_Finance. If you want to join our community, finding-value.com is where I dive deeper into all of these topics. You can use the coupon code MAYDAY if you are interested. It is still active, and you can get 50% off the first month, or you can get a larger full year discount if you're looking at joining for a year. So Jesse Livermore quotes. Now, he's a trader, Jesse Livermore. He's supposedly one of the best traders ever. I read his book, Reminiscences of a Stock Operator, and I did grab some things out of it, and some of those things are actually in these quotes. So let's go into it. I'll share my opinions as we go through it. I am an investor, but you can also listen to these and kind of implement them into your strategies a little bit. So Jesse Livermore quotes, he says, "Buy rising stocks and sell falling stocks. Think of it as a long-term investor. Buy into your winners. And if you've got losers, don't keep adding into them. You might want to wait until you see strength. And I always buy into strength. I don't buy into weakness, AKA buy rising stocks. Do not trade every day of every year. The setups just aren't there. You wait for the confluence of information, wait for a really good entry point, and that's when you start to deploy capital. Only enter a trade after the action of the market confirms your opinion. That is a trading mentality. That's more of a buy the breakout, buy that type of thing. Continue with trades that show you profit and the trades that show you a loss. So again, buy into strength, sell the losers. In long-term investing, you almost always start with a loss if you're trying to buy a bottom. And then you kind of wait for strength to show up, and then you continue to buy and add into strength. End trades when it is clear that the trend you are profiting from is over. So basically, if the trend is over, sell it. Now, that's not what I do. I wait for the overall driving fundamental factor trend to be done, not when the stock price goes up and down in the short term. So a lot of traders look at stock price performance only. I look at like a value-oriented /trend/ratio of the sector type move. So we're a little bit different there. And I will ride through some 40-50% pullbacks in a big bull market to get a much higher exit point. In any sector, trade the leading stock, the one showing the strongest trend. So that's his opinion there. Never average losses, in his opinion. Markets are never wrong. Opinions often are. The highest profits are made in trades that show a profit right from the start. A strong move, I think, is what he's talking about. As long as the stock is acting right and the market is right, do not be in a hurry to take profits. So as long as it is stair-stepping higher and showing indications of certain things, stay on the trade is what he's saying. Never buy a stock because it has had a big decline from its previous high. Yeah, that's keeping you out of that bull trap. Don't become an involuntary investor by holding onto stocks whose price has fallen, in his opinion. Wishful thinking must be banished. It is much easier to watch a few stocks than many. Patterns repeat because human nature hasn't changed for thousands of years. And that is the fractals that I look for, that's those repeating patterns. So I've adopted a lot of what he does, and I didn't grab the stuff I learned necessarily from his book, but I have grabbed some of it, and the overarching ideas that he uses and strategies that he implements, I use some of that in my investments. So we've got Willem Middelkoop here. He says, the silver price premium in Shanghai over the U.S. price on Friday was 12.75%. So due to the U.S., the COMEX paper market, he calls it the silver manipulation, You can still buy silver at a steep discount if you guys are wanting to jump onto the silver trade, which, again, guys, the silver technical charts look absolutely astonishing to me. And they look really good. Ed, the shipping investor, we've got Jeffries. The container segment remains the strongest, with freight rates approaching COVID records on the Asia-US routes. The SFI index gained 6.9% last week. Here's the thing now. This is where it gets interesting. How can container freight rates be like this if we are moving into a recession? So that seems a little bit weird. And this is Asia. A lot of this is Asia container freights. So a lot of people are probably looking at the United States, and maybe Asia, that was coming through such a big slowdown, could be maybe recovering to some degree. So Asia might be more in the driving seat than the US was historically. One of Livermore's best yet lesser known quotes: there's a time to go long, a time to go short, and a time to go fishing. And that's probably that big consolidation period in stage one, and or the big consolidation periods at the top of patterns. So stage 3 and stage 1. Stage 1's bottoming, stage 3 is topping. And that's when you want to go fishing, apparently. Stage 2 is when you go long. Stage 4 is when you go short. And that's what he means by this quote. And yeah, I had to break this all down and figure out what he meant by some of this stuff. It's not directly tied, like this is what he means by this quote. There's me. That is me doing an interview on Capital Cosm. So if you want to check that out, that's pretty cool. We've got more money. So this is invest in assets. More money has been lost by investors preparing for corrections or trying to anticipate corrections that have been lost in the corrections themselves, says Peter Lynch. So this is people trying to prepare and or predict potential corrections. So I've taken a lot of these guys' experience and quotes to heart. I haven't really been trying to predict or do anything with price movements in the short term. I'm taking long-term stances as an investor, going in for the long term, accumulating positions at what I think are incredibly good levels, holding for the bull market, and not trying to predict these corrections. Now, one thing I can do, and I might do as well, is increase allocations to, say, cash, and then wait for a correction to occur with a certain allocation to cash in case it does come. That is something I might incorporate into my investing, holding a certain percentage. So I'm not really predicting. I'm not changing any of my. I'm not changing anything about how I go about. I'm just kind of preparing myself with one other bucket of cash in case something does occur. Silver Surfer, silver accumulation cylinder complete. He's talking about Livermore, Jesse Livermore accumulation cylinder. He goes, is this what's next? I posted about this back in May, and it's hard to deny that so far it's looking like it's playing out. The one risk I see would be a sell-off in stocks and the DXY catching a bid, and therefore makes it difficult for metals in the short term. With CPI data next week, we should get a fair idea of where the DXY and silver is headed next. But if we can take out the high from May and then get through 35, pretty much it's a straight shot to 45.50 into the back end of the year. While that sounds good short term, we're seeing some extremes on various sentiment measures, including cot positioning. Sadly, we can't see the most recent report until next week due to the 4th of July holiday. Either way, next week should be very interesting in the metals and markets in general, with stock at an all-time high. And I don't put much, stock into this, much faith into it is what I should say. If this is the case, I'm already positioned for it, and we break and we rip. But most of the time, I kind of just position early and ride things. And if this plays out, perfect. It says you're rich when you don't have to worry about money. You're wealthy when you don't have to worry about time. And a lot of rich people, they don't worry about money, but they have to work for their money. You're wealthy if you don't have to worry about your time. Perfect. Someone seems to be clearly mistaken here. Most forecasts still predict a huge supply gap in the lithium market. So here's the lithium market. FAC or past projects required to address supply gap greater than 50x, a deficit of over 3 million tons. And that starts here at about 2026-7. So maybe we've got a year before this starts getting priced in, but big gap is showing for lithium if we try to adopt electric vehicles in maybe the size that we are trying to adopt, and there's a big lithium gap coming up. Morgan Housel says, changing your mind is hard because it's an admission that the certainty you once thought you held was an illusion. That makes sense. Charlie says, part of the reason I've been a little more successful than most people is I'm good at destroying my own best-loved ideas. So he can change his mind based off of maybe more data that he receives. And again, Morgan says changing your mind is hard because the admission that the certainty you had was an illusion. So U.S. nat gas storage should cross below 2020 level in 3 to 5 weeks. The 2020 level looks like we could go below it, but I know that natural gas is coming up in production. This is injection into inventory. So we'll see what this looks like with time, and we'll monitor it together on the channel here. Tavi says, and this is the gold to silver ratio, after breaking a 13-year support 2 months ago, the gold to silver ratio appears to be at an early stage downward trend. Although I firmly believe that gold remains historically attractive relative to the money supply and the current lack of fiscal discipline, I believe there's nothing more undervalued and asymmetric in this macro environment than silver at this time here. So gold to silver ratio, 13-year, breaking down, and we could see a outperformance of silver to gold. Given where the market conditions are at, I think precious metals, particularly silver and platinum, could both do some crazy stuff here. Really, really interested. I do have a big holding in silver, though, personally. Looking good. And here's me posting things. So here is silver and other currencies, because why not? Here's a move higher in silver versus the British pound. Breakout. We've got silver and Japanese yen. Breakout. We've got silver and Canadian dollars. Breakout. And then we've got silver and Singapore dollar. And what do we see here? Breakout. We got a breakout going on in all sorts of different currencies. And I know we've been staring at this in US dollars, but it's also breaking out against other currencies. It's starting to outperform everything in all currencies. I consider that confluence, boys and girls. That is what I want to see. I really wanted to see this. And I wanted to see that dollar crack where silver starts going up in the dollar, and we're doing that. Big moves, guys, big moves. So is this the commodity bull market coming or what? How is the S&P 500 in La La Land up here? Gold to SPX and oil to SPX ratio. So we got the S&P 500 continues to rip higher. There it is, breaking out above this high here. Is this going to continue, or are we going to roll over here? We've got the gold to SPX ratio down here in no man's land, super, super cheap. Then we also have crude oil that's looking like it's ready to break against the S&P 500. Just hasn't done it yet. So what's going on here? Are we going to get this breakout where crude oil and gold are just going to absolutely rip and the S&P 500 finally slows down? I kind of think so, but you know what? It hasn't turned yet. It hasn't turned yet. The S&P 500 is the stubborn SOB that just continues to go higher, no matter what the conditions. Interesting. Emerging markets look solid. Look for weaker dollar and perhaps rates falling for this to play out. Emerging markets breaking up here, looking pretty good. And this turn lower was when rates went ballistic to the upside. We've got copper futures. So copper looking like it wants to go to an all-time high here and close. So that's looking pretty good for copper. Now, here's the thing. You know, when I think about recession, I don't think about copper breaking to all-time highs. When I think recession, I don't think about crude oil breaking out against the financial assets. what the heck's going on here? Are we getting a recovery in China and we just look a little bit weak in America? Maybe that's the case. Maybe that's the case. I've got, is oil going to dip before the move higher, or is it just going to go higher? And when we look at this, we've got these consolidation periods. We break out of those consolidation periods and we do a retest. We did a retest here, but I don't know if we come back and tag it again or if we just rip to the upside. It kind of makes me think that we could just rip to the upside, which is a possibility, but we'll see. We'll see, and I think it looks pretty good, and we'll see if we get a rip higher in crude oil. The equity charting doesn't look too bad. I think they all look pretty well poised for a move higher, and again, I'll remain open to either direction. Platinum could be in a really explosive situation soon. So we've got the big move of the last commodity bull market, and we are looking like we could potentially break here. And if we zoom in on the right-hand side, this is your consolidation here, the 1 hump, 2 hump, 3 hump consolidation. We've broken that consolidation outward, and we've been consolidating again, fortunately. And there's that move. We're almost ready to break out here. It looks really good. Are we going to get a break here, Platinum? It sure looks promising. Gold to Dow Jones, and gold to CPI ratio. So gold to Dow Jones, what is this? We're breaking out, boys. Look at this. Breaking out of the downtrend. There it is. Gold to CPI ratio looking like that's breaking out. If we zoom in on the right there, a little bit of a break higher there. So we've got gold to Dow Jones, which is breaking out, and gold to CPI ratio breaking out. Gold's looking pretty strong. Gold's looking pretty strong. That's what I'm going to say. And then we've got the silver to gold ratio. Run, Forrest, run. Silver's breaking out against gold here, and it looks pretty good for a little bit of a run here of run, Forrest, run in the side there that you can see that give. But yeah, that's looking pretty good there for silver. Investing is 5% intellect and 95% temperament. It's a test of how well you can sit quietly while your emotions are screaming at you to do the wrong thing. Got that right. Amazon Monster Insider Trader Alert. Founder Jeff Bezos just sold $333 million worth of Amazon shares. He is exiting his Amazon. This is usually what occurs at the tops of markets. NVIDIA's insider also. Trader Alert. CEO Jensen Huang just sold $29.6 million worth of NVIDIA shares, bringing his 3-week selling total to over $213 million. You think these guys know what's going on? Why do they keep offloading shares? Could be a potential top is what I think. That's also what Bill Gates did, and also Mark Zuckerberg and all these other insiders. Investment wisdom: save like a pessimist and invest like an optimist. Yeah, I would agree with that. Do you really need an emergency fund if you have greater than $250K in a taxable brokerage account? What do you guys think of that? I mean, I think you need a little bit of money in a bank account just to make sure that you can cover all your expenses. I mean, I would have at least a few months worth of cash. And then if you've got all this other money, you could have that as a backup. But my other question would be, what if there's a problem with your taxable brokerage account where that's not accessible? What happens then? Then you go into your emergency fund. So yes, I still think you need an emergency fund. And I still think it's a smart thing to do to have, a few months worth of money in there, in my opinion. Most people get interested when everyone else is. The time to be interested is when no one else is interested. You can't buy what is popular and do well, according to Warren Buffett, and I completely agree with that. Here's Kevin Bamborough, and he's talking about silver here with this big cup and handle. Let's see what his opinions are. He says, this chart is not to be trifled with. It's going to blow out and run. When it does, just like the 70s, we will see a massive redistribution in wealth. Precious metals will be the standard to measure wealth loss or creation against for this next decade. Fiat as a measuring stick is broken. If you don't own precious metals in a big way, get ready to feel poorer. If you load up, you'll retire sooner. It's that simple. Well, I hope that's the case because I've kind of loaded up in it. And that's what we've got for today, guys. So that's where we're going to end it. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you'd like. I've got a discount coupon code still going on May Day if you're interested. And that's what I've got for today, guys. So we'll catch you next time. This is Finding Value.